Ever felt that gut-wrenching drop in your stomach when your portfolio turns red overnight? Or that dizzying high when a coin you picked skyrockets? If you're in crypto, you know exactly what I'm talking about. This isn't just trading. It's a full-blown psychological battlefield. Forget the stock market with its opening and closing bells. Crypto never sleeps. It's a 24/7 arena where fortunes can be made or lost while the rest of the world is asleep. The volatility is insane. We're talking 20, 30, even 50% swings in a single day. That kind of movement doesn't just test your strategy, it tests your sanity. Then you add the social media storm. A single tweet, a Reddit post, a new meme coin. And suddenly, logic goes out the window, replaced by pure, uncut FOMO or paralyzing FUD. This market is designed to push your emotional buttons. It preys on your greed, your fear, and your hope. Mastering crypto isn't just about reading charts. It's about mastering yourself. Today, we're diving deep into the psychology of crypto trading, uncovering the mental traps that drain your wallet, and giving you the tools to build a truly unbreakable mindset. Let's get into it. Let's start with the big one, greed. You buy a coin, it pumps 20%. You feel like a genius. But instead of taking profits, a little voice whispers, what if it goes up 100% or 1000%? Greed is that insatiable desire for more, pushing you to hold on way past a sensible exit point. It turns a good trade into a bad one because when the inevitable correction comes, you're left holding the bag, watching your profits evaporate. Greed makes you forget your strategy and chase unrealistic gains, and that's a recipe for disaster. On the flip side of greed is its equally destructive twin, fear. Picture this: the market dips, red candles everywhere. Your portfolio is bleeding. Panic sets in, your heart races, and you can't think straight. All you want to do is sell everything to stop the pain. This is fear talking. It causes you to sell at the bottom, locking in your losses right before a potential recovery. Fear is a primal instinct, but in trading, it leads to irrational, panicked decisions that almost always cost you money. It's the force that makes you sell low after buying high. Now, let's talk about fear's sneaky cousin, FOMO, or the fear of missing out. You re-scrolling through social media and see everyone talking about a new meme coin that's going to the moon. It's already up 300%. You haven't done any research, you don't know what the project does. But you see the green charts and you see and stand the thought of missing out on easy money. So you jump in, buying at the peak. FOMO is a powerful social pressure that preys on our desire to be part of the winning team. It leads to impulsive, unresearched buys, often right before the early investors decide to cash out. Once you've had a few wins, another danger emerges: overconfidence. You made a couple of great calls, and suddenly you feel invincible. You start thinking you've cracked the code, that you can't lose. This is when you get reckless. You might start using higher leverage, putting a huge chunk of your portfolio into a single risky coin, or ignoring clear warning signs. Overconfidence makes you believe you're better than the market, but the market has a brutal way of humbling even the most experienced traders. It blinds you to risk and leads to sloppy decision-making. And then there's impatience. Crypto moves fast, but wealth isn't built overnight. Many newcomers expect to get rich in a week. They jump from coin to coin, chasing quick pumps, never giving their investments time to mature. This is called shiny object syndrome. True value investing, or even successful swing trading, requires patience. You need to wait for the right entry points, and you need to give your strategies time to play out. Impatience leads to overtrading, racking up fees, and making emotional mistakes because you're not getting that instant gratification you crave. Let's add another cognitive bias to our list: confirmation bias. This is our natural tendency to seek out and favor information that confirms what we already believe. If you're bullish on a certain coin, you'll actively search for positive news, optimistic price predictions, and influencers who agree with you. You'll subconsciously ignore or dismiss any negative news, critical analysis, or red flags. This creates an echo chamber that reinforces your initial decision, making it incredibly difficult to see when you might be wrong. You end up holding a failing project all the way down because you filtered out all the evidence telling you to get out. And finally, we have the sunk cost fallacy. This is a tough one. Let's say you invested $1,000 into a project, and it's now worth only $200. Logically, you should evaluate the project based on its current potential. But the sunk cost fallacy makes you think, I've already put so much in, I can't sell now. If I just hold on, maybe it'll come back. You're making a decision based on the money you've already lost, which is gone, by the way, rather than on a rational assessment of the future. This emotional attachment to past investments can trap you in losing positions for far too long, preventing you from moving your remaining capital to more promising opportunities. So we've identified the enemies: greed, fear, FOMO, overconfidence, impatience, confirmation bias, and the sunk cost fallacy. Now for the most important part. How do we fight back? This is your action plan. First, and this is non-negotiable, you must create a detailed trading plan. Before you ever click buy, you need to know your entry price, your target price for taking profits, and your stop-loss price, the point at which you automatically sell to cut your losses. Write it down. This plan is your shield against emotional decisions. When the market goes crazy, you don't have to think. You just follow the plan you made when you were calm and rational. Second, start a trading journal. After every single trade, win or lose, write it down. What did you buy? Why did you buy it? What was your emotional state? What was the outcome? This journal will become your greatest teacher. You'll start to see patterns in your behavior. You'll notice that maybe you always make bad trades when you're feeling FOMO, or that you tend to sell too early out of fear. Journaling provides the self-awareness you need to identify and correct your psychological weaknesses. Third, embrace the stop loss. A stop loss is an automated order to sell a coin if it drops to a certain price. It is your ultimate safety net against fear and the sunk cost fallacy. It takes the decision out of your hands. Before you even enter a trade, you decide the maximum amount you're willing to lose, and you set the stop loss. This single tool can save you from catastrophic losses and the emotional turmoil of watching your portfolio crash. It's disciplined, automatic risk management. Fourth, do your own research. Seriously, don't buy a coin because a stranger on the internet told you to. Understand the project's fundamentals, its technology, the team behind it, and its tokenomics. This is your best defense against FOMO and confirmation bias. When you have genuine conviction in an investment based on solid research, you're less likely to be shaken out by market noise or swayed by hype. Knowledge builds confidence, the real kind, not the reckless, overconfident kind. Finally, practice discipline and patience. Zoom out. Look at the bigger picture. Understand that crypto is a marathon, not a sprint. Only invest what you can truly afford to lose. This reduces the emotional pressure and allows you to think more clearly. Take breaks from looking at the charts. Go for a walk. A watched pot never boils, and a constantly watched portfolio just fuels anxiety. Stick to your plan, trust your research, and let the market do its thing. By understanding these psychological traps and actively using these solutions, a trading plan, a journal, stop losses, and deep research, you can transform from an emotional, reactive trader into a disciplined, strategic investor. It's not easy, but it's the only way to survive and thrive in the wild world of crypto. Thanks for watching, everyone. If this helped you, please give this video a like and subscribe for more content to help you navigate your financial journey. Stay smart, stay safe, and I'll see you in the next one.